Okay, I wanted to go over an analyzing transactions problem just with you to make sure that you understand it in case you need something to go by. So in this problem, we have already have balances. In some problems on your homework, you may not have existing balances, but here we do. So to look at your transactions, click on I. And for this one, it says on A, received contribution of $16,000 cash from Marissa McFadden in exchange for common stock. So we are receiving cash, so cash will increase $16,000. And also, Marissa is going her common stock. She's going to have stock of $16,000 invested in the company because that is how much she contributed. You could call that contributed capital. But here we know that she exchanged cash for common stock. So her common stock account or the common stock account will increase. So now we have to do our our new balance of $18,800 when you add those, and then you bring 2,400 over, and this would be 25,800 when you add those two together because there was already some common stock. And then let's make sure. Okay, now let's go on to the next transaction. Performs service for a client and receive cash. Anytime you perform a service, you record revenue. So anytime you see that a company performs service for a client, you record the amount of the service as revenue. So service revenue is $1,700. In this transaction, we actually did receive cash. If we do not receive cash, then we will record it as an account receivable. So I believe that would add up to $20,500. And then we need to add these two together. Alright, for the next one, paid off the beginning balance of accounts payable. So we're paying the balance off. The balance is $3,000, so we're going to pay all of it off. So the accounts payable account will go down when we pay something off that we owe, and it's in accounts payable. The accounts payable actual account will go down, and we're using cash, so cash is going to go down. So now the accounts payable, since we paid all of it off, it has a zero balance. Okay, the next transaction, can't see what this letter is, but let me move this over. Okay, now I can see a little bit better. D, purchase supplies from Office Max on account for $500. So we are getting $500 worth of supplies, and we're not paying for it. We're going to pay it later, so it is an accounts payable. So now we have a balance back in accounts payable, which is very normal. Okay, and then for E, collected cash from a customer on account. So we're getting cash. A customer is paying on their accounts receivable. So cash is going up. And the accounts receivable, as you can see, is that. Let me make this is smaller, so maybe we can, okay, that's too small. Okay, so now we can see that accounts receivable is going down because we're paying on the, they're paying us, they're paying on their account. So it turned into no longer an accounts receivable. The accounts receivable turns into cash. So when that receivable, when they're paying on the receivable, it's like pouring the receivables cup into the cash. 15 minus 8 is 7, and 6 minus 1 is 5, so 15,700. Make sure that you put the parentheses around that. Let's see what I did wrong here. 0, 0, 15 minus 8 is 7, 6 minus 1 is 5. Okay, that's right. Let me look. Let's go ahead and put all these in. Oh, wait a minute. I'm adding here instead of subtracting. I wonder I couldn't make that work out. So that would be 19,300. Yes, okay. Alright, then for F, cash dividends of 1,700 were paid to stockholders. So stockholders, we're paying the stockholders cash, so cash is going down by 1,700. And the dividends account, we paid 1,700, so that's the amount in the dividends account. Okay, remember dividends are leaving the company, so equity is decreasing, but the actual dividends count is 1,700. So 0, let's see, 13 minus 7 would be 6, and 8 minus 1 would be 7, so 17,600. Okay. Now the next one, we consulted for a new band and billed the client for services rendered. So we rendered services, so that's revenue of 5,000. Rendered means we performed the service, and then we bill them. When you bill a customer, that means, hey, I need your money, but I haven't gotten it yet, so I charge them 5,000. That's an accounts receivable. We're not getting cash yet, so it's an account. If we're not getting cash yet, it goes in accounts receivable. If we're not getting cash for a service yet, that means it is going to be cash later, and it's going to be accounts receivable. Okay, and then for H, recorded the following business expenses for the month. The first one is we paid rent of $1,200. So cash is going to go down, and this is an expense that we have to have. So we say that it's a rent expense. So rent expense of $1,200, and then the next one is $800 for advertising. So cash, we're spending $800. And advertising expense would be here. So now we have to basically subtract both of those. Tab over, be careful here. Okay, and that is pretty much all for completing a transaction.